Degens, traders, market watchers, and everybody in between. Welcome back to Trades and Gains. I'm your host, Max Pitts, and we decode Wall Street madness so you don't get absolutely wrecked going into your week. So go ahead, drop a like, follow, comment, subscribe, all that good stuff. This week we have geopolitics meeting Powell's poker face. We've got oil surging, retail sales in focus, and the infamous Fed dot plot set to drop mid next week. Buckle up. Let's dive into this market jungle before Jerome Powell gives it a fresh haircut. Now, going ahead and talking about the roller coaster we were taking on last week, some quick scoreboard information. The S&P 500 is down 0.6%, and Wall Street flinched. The NASDAQ is down 1% because tech got absolutely tagged like a rare animal species in a jungle by bored rich people. The Dow Jones, the big boys said, no thanks. Now, why did this happen? Geopolitics. Friday served up a spicy Israeli airstrike on demand and on Iran. Boom. Oil popped 12%. On this news. Suddenly, your Uber Eats order costs $3 more, and traders are sweating CPI all over again. JP Morgan says oil could hit $120 a barrel if the Middle East tension escalates. That could spike CPI back to 5%. Powell's literal worst nightmare, by the way. But B of A is telling us all to relax. As long as oil chills out soon, bulls still got gas in the tank, literally and figuratively. Now, on Tuesday at 8:30 a.m. Eastern, we get retail sales report. It's like checking the receipts after your Vegas trip. Are we frugal or are we YOLOing here? Now, the headline, we're expecting down 0.6%. That's a huge jump because we just had 0.2% as our last print. We also have core, no gas or auto included, up 0.4%, and the control group, aka the GDP MVP, up 0.5%. Wells Fargo analysts say U.S. consumers are still on caffeine. If this report shows strength, equities might rally. If it tanks, grab the exit door and stage left, folks. Now, we do have the Fed Fest coming this week on Wednesday. 2 p.m. Eastern drops the dot plot. Spoiler, rates stay the same, 4.25% to 4.5%. But the real juice is in the dots, those tiny projections that say how many cuts the Fed sees ahead. Wall Street is praying to Jesus Christ for 2 cuts in 2025. But if Powell shrugs and says, not just vibes, boom, expect some volatility. Oxford Economics says any surprise hawkishness could trigger a full market tantrum. Add Powell's press conference at 2:30. If he blinks weirdly or coughs twice, the algos will flip out. Just trust me on that because it happens every single time. Now, let's talk about what we can't miss this week. Monday, we have Empire MFG Index down 7.5, which is a little bit of a tick up because we had down 9.2 before. Again, we have those retail sales coming in. We have FOMC coming on Wednesday. Thursday, markets are closed because of Juneteenth, so be aware of that. Friday, we have leading index expected 0.1% and the Philly Fed Outlook as well. Now, here's your cheat sheet. CPI jitters, go ahead and blame oil for it. Retail sales, will the consumer keep flexing and spending money? That is the big question here. Fed dot plot, the market moves where the dots land. Keep eyes on Powell, Middle East news, and those sweet, sweet options flow. By the way, provided by Investor Central Club. Smash that like, subscribe, and drop your market prediction in the comments. Will the Fed pivot or stay hawkish? Are we going to adjust? Are we going to melt? Catch you in the next recap. Until then, trade smart, stay sharp, and remember, don't fight the Fed unless you're holding puts. Peace.